Hello, I'm Lily Jamali. Welcome to Market Call. Tonight, our guest is Jaime Carrasco. He's portfolio manager at Canaccord Genuity. He's taking your calls, emails, and tweets on precious metals, blockchain, pipelines, utilities, and REIT stocks. Call us toll free at 1-855-326-6266. Send us an email to marketcall@bnn.ca or tweet us at marketcall. And with a warm welcome to you, Jaime.
Thank you for having me back.
Jaime, let's begin with never a dull moment in the news these days. U.S. President Donald Trump threatening a 20% tariff on all cars imported from the EU. I think that's a good place to start. Just your initial reaction
I think it is. I think when I look at Trump, you got to look at the bigger picture, which is we are watching all of these forces throughout the world that are ripping up the global system that we had set up. Trump is on the lead of that, in that, you know, he's pretty well saying to the G7 at the last G7 meeting, you're on your own. And what he's doing is really unwinding a system that, in my opinion, is not fully working anymore. It's only working for not the majority, and at least Asia. There's a lot of trends that are coming apart. Now, it's funny because 10 months ago there were two main warnings that I think people should pay attention to. One was Greenspan, who was warning about stagflation. Mm-hmm. Stagflation, inflation with no growth, is actually building. He thinks that it's going to replay like the 70s. And one of those trends that is accelerating that trend is exactly what you're talking about, the rip-up of the global system. Then you have de-dollarization. James Rickard has called it the axis of gold. Russia, China, a lot of countries are starting to function outside of the dollar. Mm-hmm. You have the populist wave. Look at Italy now. Italy's saying, hey, we're not going to pay that money. And because of that, I think we have greater systemic risks. The other warning that I think is very important, it was done by the chairman of Terry Duffy, the chairman of the COMEX, and about 10 months ago he was asked about gold and why gold should be doing better in this environment. And he was asked, well, what's going on with gold? And he says, well, people are dismissing it, but if you look at what's going on in the world, and this was 10 months ago, gold right now should be at about $5,000 to $6,000. Things are worse today than they were 10 months ago. Now, to me, that's a massive opportunity because, as he said, people are dismissing something, and you can't dismiss it forever because sooner or later we're going to have a massive jump in price. I do believe that because at the core of all these changes is the monetary system, and it needs to change. Well, the idea that gold would be at $5,000, I think, is certainly eye-popping for a lot of our viewers. But I think it speaks to, even the notion of that, speaks to a little bit of a disconnect between the way that the news cycle is going and the way markets are going. Mm-hmm. What is the trade around that, then? Well, I personally have been working under the assumptions that markets aren't working as markets anymore. They're being manipulated through ETFs, tons of money circulating in the system. And within that, I think some markets have been pushed up, some market has been pushed down. Bottom line is central banks around the world are acquiring gold. They're not selling it. Western banks are not buying any, but China's acquiring, Russia's acquiring, Turkey's acquiring. There's repatriation. People have to look at that puzzle because throughout history, gold has been the ultimate form of money. One of the problems that we're in is that we've come to believe that currency, we can control the value of money, the value of our money by lowering interest rates. Mm-hmm. Well, that distortion for the last 10 years has created a massive economic dislocation, massive debt, and that will have a day of reckoning. Throughout history, it always goes back to gold. And now you have this disruptive force, which certainly affects the gold market. And of course, I'm talking about, well, but I was talking about cryptocurrencies, which I think some view as a competitor to gold and other precious metals as far as an investment. I don't. I view it as a competitor to currency, paper money. You can duplicate gold. You can duplicate Bitcoin. The technology itself is like thinking about the email, right? Mm-hmm. A couple of years ago when somebody first said, hey, maybe, well, you're young enough that you probably grew up with email, but myself, you know, there was a time where, hey, yeah, I'll send you an email. How do I do that? Mm-hmm. Same thing with cryptos. What they're going to replace, though, is the money system, the currency system. We're working in this thing that we think that we just can continue to print and solve all our problems by just printing money. Gold is that constant that nature has given us, that has been with us for 5,000 years, that we can all trust at times when we lose trust. And yet has no inherent value to some people. Say that to the Chinese, say that to Russia, say that to Asia. Indian people understand the value of gold versus copper. To them, it's money. The poorest person in a slum in India will have an ounce of gold that he will transfer over to his kids. We have just forgotten that because we're living in this credit cycle that we think we can just, hey, put it down and pay later.
Fascinating stuff. So in the precious metals space outside of gold, where do you see opportunity?
I see opportunity in anything that's inflation driven. If you follow Greenspan's warnings, is that we are going to relive the 70s. Within that environment, what we're looking at is inflation with no growth through the devaluation of money. We're starting to see that currency fight on a global basis start to occur. Everybody wants to lower their currency, including Mr. Trump. So within that, we're going to have inflation. So all hard assets should start to do very well. I think within real estate as well, but first we need to get the correction for what's the cost of money to borrow, right? So I do see opportunity, but not necessarily in where it's been. It's where the money will flow and where it's flowing around the world.
All right. What's the recession scenario? We know it's going to come. When does it play out?
10 years ago, nobody was talking about Lehman Brothers. 10 years ago today, Lehman was in trouble. I got to tell you that Deutsche Bank doesn't look that great because of their Achilles heel, which is Italian debt. All of a sudden, the new Italian government doesn't want to pay the $250 billion that the European Central Bank gave the last Italian government to put lipstick on the Italian financial market, right? So if we have some kind of systemic risk, I don't know. Because we're talking $43 trillion worth of derivatives, right? So either something might occur. As to on a long-term basis, that dislocation, what's it look like? Inflation with no growth. So similar to the 70s and 80s. How bad does it get? I don't know, but I'm preparing I'm preparing clients to definitely benefit as that wave begins to shift and have some allocation. Prudent money management says you should have at least 5% in precious metals for protection from financial distress in normal times. These are not normal times. Well, nobody owns any. So to me, I think that's a benefit because as more and more people start to come in, you know, they're always late to stay late at the party and never get in early into things. So I'd rather be contrarian and acquire those things that everybody will need.
Contrarian to the extent of gold at $5,000.
You know what? If we get to 3, I'm going to do very well. So I'm not really. I don't want to live in a world with $5,000 to $10,000 gold. I think that would be.
It's a scary world.
It is a scary world.
But even 3,000 would be a real blowout, wouldn't it?
Right. But what kind of problems are ahead for us, considering all of the debts that need to be repaid? And I think investors are not addressing those issues.
Finally, talk me through, you have 3 segregated portfolios. Talk me through the structure.
Okay, perfect. First is the special opportunities portfolio, which I structured. I was covering high net worth individuals and family offices in Chile for Scotiabank for the last 4 years. The first thing I realized when I started sitting down with them is that they're invested exactly like everybody else. There's no hedge. So I thought, well, why don't we set up something completely separate? And I started pitching them on this, saying, look, you got a hedge. So that's how that vehicle came about. It's a standalone solution to get invested in the sector. It's all stock driven. There's no funny products like ETFs or futures, strictly stock selection. Then there's the equity income portfolio, which is more for my parents, people that need to generate cash flow at a time when interest rates might start going up. In that portfolio, we're sitting in a lot of cash, starting to look at convertible bonds, building bond ladders now, very short term. Equities that pay dividends. Within that, I'm structuring more outside of Canada. Dream Global, for example, it's European cash flow coming in to avoid any currency exposure. And then the other one is just the cash management portfolio for corporations. Okay.
Well, thank you for that. We'll be back with Jaime Carrasco. He's portfolio manager from Canaccord Genuity. He's answering your questions about precious metals, blockchain, pipelines, utilities, and REIT stocks. Call us toll free at 1-855-326-6266. The number again, if you're listening to us on the radio, 1-855-326-6266. Welcome back to Market Call Tonight. I'm Lily Jamali here with Jaime Carrasco of Canaccord Genuity. Let's take our first email of the evening. This one is from Nancy right here in Toronto. Asks about Agnico Eagle. To participate in gold for the next 12 months, would you buy Agnico Eagle?
I've been recommending Agnico since we had that big decline. It's the one of the few holdings that I constantly recommend as my top pick, still in there. It's one of the best run companies. I think that right now I'm really excited about the price dislocation between the recent pullback in gold and Agnico holding 59. I think we're starting to see the producers will lead us out of this. When they finally go, we'll know that we're through it, and Agnico's holding very well. I like Agnico because throughout this period they've been producing gold at very low prices, unlike everybody else. If you look at Barrick, you look at the big boys, all they were doing was selling their assets to stay alive. These guys have been making money on they produce around 700. So because they had a lot of cash, they've been acquiring all kinds of companies since 2011, and I think I want that upside. I want reserves on the ground, and they have them. The four components within a gold company that I like is good management, reserves on the ground, low cost of production in geopolitically safe areas. I think that's the biggest risk, that somebody's going to take your assets. And Agnico fits all of those. So yes, I would recommend it to more conservative clients and have it in my more blue chip portfolios.
Okay, thanks for that question from Nancy in Toronto. Let's go over to London, Ontario. Joan is on the line. Go ahead, Joan.
Hello, I'd like to know about Brookfield Properties on the TSX. I'd like to know what you think of it, and I'd like to know the consensus. Thank you very much. Bye.
Sure.
Why don't we do the consensus first? It's one that I've held within the income portion of the portfolios. I like Brookfield. I like the way again, great management, the way it's run. At Canaccord, we have it with a $24 target and as a buy. That's US dollars. And we think it has very strong fundamentals. I always like the Brookfield set of companies because of how well it is managed. Now, keep in mind, though, that within the portfolio that I hold Brookfield, I have cut back on the position. So I've raised cash, but I am holding it. So it's not one that I would go out and go nuts about. I'd rather keep that cash and wait to see what happens throughout the year.
And how much have you pared back from your portfolio, ballpark?
In that portfolio, I'm sitting on about 25% cash. Okay. The precious metals portfolio is sitting on 15% cash, and I'm ready to spend that.
Okay, and I'm looking this one up for you. It looks like it has 3 buys, 1 hold, and 0 sells. As you mentioned, this is really a group of companies, so this is just the properties partners piece of that empire. And so looking at a return potential of 21.8%. So looking at a 12-month target price of $31.60. Yeah,
just one last thought on Brookfield. One of the things I like about Brookfield, and one of the bigger picture issues that we should maybe talk about, is this whole de-dollarization and the currency wars that we're starting to see. In that environment, I think Canada is in a bit of trouble. Look at what happened to the dollar today. So to have cash flow coming in from outside of Canada, I think it's going to be important for investors. And within that, I think Brookfield and all of the, TransAlta Renewables, all of the great Canadian companies that are working abroad that can generate cash flow from abroad, I think they're pieces of the puzzle for income-generating investors that I think will do well and should do well as well in an inflationary environment.
Yeah, the Canadian dollar really getting battered these days at a yearly low. Let's go over to Scarborough, where Frank is on the line. Go ahead. Hey, Frank. Frank in Scarborough, are you on the line? I guess. Yeah. Oh, there he is. Okay, go ahead. And if you could turn your TV volume down.
I would like to ask your guest about Power Financial. I bought it for $33.85, but 6 months ago. Now it's $31.50. Worried about what do you think? Do you have to keep it or sell it, get rid of it? Or if you have something else in mind, if you recommend to buy another stock, but I would like to let you know if you recommend something else. I'm a senior. I would like to make a living. If there is something good dividend, high dividend, and safe. That's what I would like to get your opinion. I will hang up and listen. Thank you very much. Bye-bye.
Thanks, Frank. First of all, when looking at some of these blue chip companies right now, one of the concerns I would have for somebody like Frank is the fact that dividend yields are not rich yet. right? If we look at power, it has had a pullback. If interest rates continue to go up, this is my concern within the equity income portfolio, is that as inflation, the first hit's going to be a rise in interest rates. And as interest rates rise, dividend yields need to correct. And so because of that, what usually happens is you get a flush of selling by a lot of pension funds that they're required to sell, and they go always for the best assets. Power would fall into that. And so I would be more cautious than chasing it right now. If anything, I'm especially people like Frank, I'm saying, look, be a little bit more conservative, cut back and wait, and reorganize your companies that you have within the dividend structure to make sure that you maximize cash flow. And within that cash flow maximization, have it come from as much as from abroad.
Yeah, he sounds like a fairly conservative investor. He's looking for safety.
Correct. For people like that, what I would be recommending right now is to start looking at maybe convertibles, start switching over to the bond market, short maturities, not long maturities, because yields have to go up. So a bit of a switch than the blue chip equities.
Okay, thanks for the call. We'll be back with Jaime Carrasco. He's portfolio manager from Canaccord Genuity. He's answering your questions about precious metals, blockchain, pipelines, utilities, and REITs. Call us toll free at 1-855-326-6266. Welcome back to Market Call Tonight. I'm Lily Jamali here with Jaime Carrasco of Canaccord Genuity. Let's go to Calgary, where Myron is on the line. Go ahead, Myron.
Hi, Jaime. I'm calling about Summit Industrial REIT. It pays pretty good distribution, pretty good yield, and it's been climbing as interest rates have been going up. Do you think that's going to continue, or what's your assessment of this company?
You know what, we have Summit on hold, but we kind of like it because of how well located the properties are. We have it on a hold. The yield sitting at 5.7. It's not one that I've added. I've been adding more REITs that again, outside of Canada. So I've been a little bit cautious with my REITs, and I have cut back. One of the, we think the strong fundamentals, the GTA, are driving cash flow, and it's well positioned. But again, it's in Toronto. So with regards to all the REITs, you got to look at where their properties are. If anything, right now, the area in Canada that I happen to like would be Alberta, because that's where a lot of the REITs have gone through the grind, and we seem to be having some kind of a pickup in the oil patch. In Toronto, things have been hot. So anything that has a high level of properties in Ontario, I don't know, I would be a little bit cautious, and I think that's why we have it on hold. But if you already own it, just keep an eye on it and put a stop loss. If you're looking to acquire at a 5 point, what's the current yield? Hang on, where is it? Dividend yield right now sitting at about 5%, I believe. Sorry.
I've got 6.12 on a 12-month yield.
I have it at 5.9 on the report, so it must have come down a bit. So with that, it's a pretty nice yield. But again, I think that if I want to make sure that a lot of that cash flow, where is it coming from, just to protect myself.
And what about within the REIT space? Are you weighted more heavily towards the industrial space versus, say, apartments or?
Definitely, yeah. I do like the rental REITs. Like there's a couple, but it got taken out. I believe Pure was one that got taken out.
Pure Industrial?
Pure Industrial got taken out, right? But there is one that is more apartment rentals. I think that there's a problem with renting. If you look at Toronto, that's the one area where I would be looking at, because young people can't afford, so they got to keep renting. So I think there is a definite demand for rental. And on the industrial side, if it's out west, in Ontario would be, I think we're still moving, but I don't know, with Trump, what's going to happen, right? What's going to happen to the auto sector? A lot of questions aren't answered.
Right. All right, let's go over to Montreal, where Joe is on the line. Go ahead.
I'm retired, and I have about 5% of my cash account in Interpipeline and AltaGas. And I got them for dividends and also for some growth. And I'm thinking about adding, and I wanted to see if you have a favorite between the two, or if I maybe should be looking to put it elsewhere for a retired person. Thanks. I'll hang up and listen.
Thanks, Joe. Inner Pipeline versus AltaGas.
Well, you know what? I would be rotating a little bit of money over AltaGas. I like them both. I think AltaGas right now, it has a yield. I believe it's sitting at about 8%. We have Interpipeline as a buy right now. We like it. We think it's got upside. And with AltaGas, I think it's one of those that, again, within the pipelines, I see them more as monopolies. We're not building any. I love the Green Group because they're like fighting it, and they're just there, and they're shipping things. And so I think acquisitions will continue. With regards to AltaGas, the price has come down quite nicely, so maybe it's not a bad time to rotate a little bit into it, but I would hold both within the portfolio in measured amounts. Again, I'm not overweight these companies. I'm just holding the ones that eventually I will be adding, and both of these are good quality. For AltaGas, just give me a second. Let me just confirm our rating, because if I recall, we had it as well, we do have it as a whole.
Okay.
Right? And because of that, I think that I picked a little bit up for a client that liked the yield right now. He thought it was quite reasonable, so we bought a little bit. But again, it is Alberta based, and I think if things turn around in Alberta, we should have a nice move in AltaGas, and more institutional money should be moving into it.
All right, thanks for that, and thanks for the question. We'll be back after this short break. Past picks are next. Stay with us. Welcome back to Market Call tonight. And it's time now for past picks. We're going to start with Franco-Nevada, which you recommended in April at $86.95. It's now at $92.99. Total return of 7%. Well done.
Actually,
Not bad
Franco
for 2 months.
has steadily done extremely well throughout this period. It's the one that I recommend to all my older clients. If you can do a longer-term chart, so you can see since 2015, it's had steady growth. I actually like what's happening with Franco, Agnico, and are the next best pick, because they're definitely holding their value as gold has pulled back and the dollar has risen. So that, to me, is giving a nice contrarian indicator of that we might be through this malaise of precious metals. Franco, great payer. I like the dividend structure. If prices really take off, the dividend will grow, and it's not just gold. It's oil, it's copper, it's a diversified streamer.
Okay, so you keep this one for a while.
Definitely.
All right, moving on to First Majestic Silver. Sensing a theme here.
Yeah, well, silver, I've always, sorry.
And this was a nice return for you, 29% since April. Went from 787 to 1017. Again,
it shouldn't be doing this if it's on pegging, which is great. First Majestic has one of the best leverage to the price of silver, low-cost producer, high reserves on the ground, great management in Mexico. I think it's one that if you want to participate in the precious metals, silver will do better than gold. It's poor man's gold. Central banks buy gold, but the average person, when they get it, they're going to go out and buy silver, and First Majestic should do extremely well.
So what do you think has gone on there? You think you mentioned management. What is it about this company, even as silver has not done quite so well?
I think with all three, these are very good choices within the sector, and you have some very disciplined money that's starting to come into the sector. That's inevitable. At some point, you're going to have smart money coming in, and that's how you're going to notice it. You're going to start to see the pegging, because it's in the producers that you're going to have the real speculation. To me, gold is money. It's no different than holding U.S. dollars or Canadian dollars. I hold physical gold or physical silver. The speculation, the true play is in the producers, the leverage that they're going to have as the price moves, and both of these should do extremely well.
Okay, and this is not the winner we were hoping for, but we're going to put it up. Hive Blockchain.
Hive Blockchain.
You recommended it at $1.30. It's now at 70 cents, so a total return of 46%. Are you hanging in there with this one? What do you do with this?
Okay, blockchain. Hive Blockchain is about the blockchain. Is the technology going to work? Is it going to be as disruptive as I think it's going to be? And, you know, a lot of people thought the internet was a joke, didn't understand it, and look what it has done. I personally think that if blockchain is going to go forth, which it will because of the cost savings, within that it's going to be what coins are going to work within it, and developers are definitely accepting Ethereum as the coin, which is what they're mining. So what we have here is an Ethereum-based miner. Now they are mining at very low cost, much lower than the current price. I think it's around $350 US. They're the biggest miner in the world. Hash rates have come down because exactly of what you're saying, that people are kind of like scared all of a sudden. You know, you had that massive mania at $20,000 Bitcoin. Well, now nobody wants to look at it. I think it's one that I'd rather hold on. I'm not adding yet, but I'm definitely waiting to see when things level off. And it looked as though, if you look at blockchain, the whole blockchain, what's interesting about the blockchain, so it came down like from 700 billion to 250 billion, and on the move up, 37% of that move was Bitcoin. So the money is going into special coins like Ether, and because of that, and by the way, they have cash in the bank. I believe they have about $100 million. They just added more capacity, so they are growing and they're staying put within what I think is going to be a very, very disruptive technology to the financial system, which I think is going to go through some kind of cleansing.
All right. Thank you for that. We'll be back after this short break. Our number is 1-855-326-6266. Welcome back to Market Call tonight. I'm Lily Dramali, and I'm here with Jaime Carrasco of Canaccord Genuity. Let's go to Scarborough, where Nazar is on the line. Go ahead, Nazar.
Hi, Lily. Hi, Jaime. Jaime, I heard your comments on gold and noted that you are quite constructive on it, and also that you suggest one should have one's holdings of up to 5% in gold. Yamana Gold seemed to have stalled between $3.50 and $4 for the last 4 months. Of late, it seems to be moving again beyond $4. What do you see its prospects as going forward, and do you have a target price for it? Would you buy it here? Thanks for taking my call.
Thanks, Nisar. Actually, those are good questions. First of all, let's just talk about the target price. We have a target price of $5.75 for this company. It's funny. I was in Chile just about 3 weeks ago doing a presentation to the high net worth and family office people that I've been talking to for a while, and I had 2 charts. One was, I called it the past, because it was a 5-year earnings growth of some of the companies in the portfolio. And what's interesting, even though within the last 5 years, the actual earning growth, if you look at Agnico out of Thompson, it's tracking almost 9%. If you look at Kirkland Lake, it's tracking almost 30%. So even though in that last 5 years, 3 of those years were negative, earnings are starting to show improvements because some of these companies have actually cut their costs very low. Then I showed the future, and for that I just showed the targets that we currently have on the companies from Canaccord's research, and we have a really good team. And all of them were, like this one, 575, and it currently closed at 4. A lot of them were plus 60%, 70%. The companies themselves are trading ridiculously priced. What's good about Yamana is, again, well managed. It's located in areas in the Americas, which I like. I don't see any of the countries.
I see revenue coming in from Brazil at about 40%, 36% from
Correct.
Chile, 15% from Argentina.
Right, and the cost of production is sitting at, in this case, at about, hold on, I just had it, and it escapes me, I'm reading through I believe it's about $800. I'll confirm that, but I can't see it. Sorry. But again, within the gold spectrum, these are all companies that I think are extremely well priced right now from a revenue perspective. What I'm looking at is right now they're all working on getting ahead, starting to build revenue. But one piece of the component that isn't even there is reserves on the ground. If you look back at 2011, 2010, once we crossed that $1,300 mark, all of the reserves on the ground started to have value. That's the leverage I want to buy within these companies. That's why I have them in the portfolio. Now, Yamana is not in my portfolio, but it's one that I wouldn't dissuade people from buying. It's well run, high reserves on the ground, geopolitically well located, but it requires patience. That's the only thing. If you can bring up the chart for a second, I just want to look at the chart. Like, has this one pulled back at all, or is it holding?
It has. It's about 50%,
okay.
50 cents lower than it was in December.
Okay, so it's not bucking that trend like the other ones that I've chosen,
right.
which I find interesting, and eventually you're going to get that leverage. Okay, so
but we had that previous, even longer term chart where you see it was in the $18 range in the 2013.
Yeah,
2014.
you know what's interesting? Forget that period. All of these companies have completely rebuilt themselves.
Right.
This sector.
That was all kind of.
Well, at $1,900,
right.
anybody could make money. What I like are the companies that survived and lowered their costs and increased production through these years. Like that took really good management. First Majestic and Nico, and to some extent Yamana as well. Now, it's not in the portfolio because I have others right now that I don't want to make any changes from the portfolio as I brought it over, but it's not one that I would dissuade people from buying.
Okay, let's go to Barry, where Cliff is on the line. Go ahead.
Very much. You're doing a fabulous job.
Thank you.
Jamie, would you give me your opinion on Artis REIT? I'm wondering about the sustainability of the dividend. They're paying 9 cents a month, which is an 8% yield, which is a pretty high yield. And could you give me the street consensus, please? Thank you very much.
Artis it's one that I've owned in the portfolio in the past. I actually shedded it because of its Alberta exposure, its Western exposure a couple of years ago, and I haven't looked at it yet. I haven't really gone back into it because of that, but it's one that I'm starting to warm up. We do have it as a whole right now, and again, to me, that's not a negative thing. It's actually a good place to start shopping because I know that if the Alberta economy comes back, they will do well. And if the Alberta economy comes back because of inflationary pressures, they will do very well. Right, so again, it's one that I would be looking at. It's not necessarily one that I would be adding right now as far as the REITs. Dream Global is my go-to right now, and I took quite a bit of the new issue they did because again, they're generating cash flow from outside of Canada.
Okay.
Right, so right now it's one that I would be looking at, not ready to invest in, but and we have it as a whole.
Okay, and the street consensus is 1 buy, 9 holds, so Canaccord Genuity is not alone there, and 1 sell, so a 12-month target price of $13.88.
Who's to buy?
For a 3.3% return potential, and TD Securities, Jonathan Kelcher. Is the buy. Thanks for that question, Cliff in Barrie. We'll be back with Jaime Carrasco. He's portfolio manager from Canaccord Genuity. He's answering your questions about precious metals, blockchain, pipelines, utilities, and REITs. Call us toll free at 1-855-326-3266. Welcome back to Market Call tonight. I'm Lily Jamali with Jaime Carrasco of Canaccord Genuity. Let's go to David in Pembroke, Ontario. Go ahead, David.
Okay. Good evening to you both. Mr. Carrasco, I have a U.S. dollar RRSP account, and I'm kind of wondering whether TIPS would act as a good inflation hedge in the future. I'll hang up and listen to your call.
Yeah, they should act. I haven't looked at TIPS in a while, and I would want to know the composition of the TIPS now. The reason that I say that is that one of the concerns I would have if we go into any kind of negative scenario is that value being generated from futures, or is it generated from options? How is it being generated? Reason being is that if we do have a very negative outcome going forward at some point and the futures become a problem, well, you might lose your investment. So it's one that I have looked at in the past. I have not looked at the composition for a while, so I don't want to say yes or no, but if it's being generated from even an option-driven vehicle, you're okay. Anything beyond that, where you're going out a risk spectrum where somebody has promised to deliver something out of thin air, well, I wouldn't trust it too much. That's why I think the best hedge for inflation will be gold and the gold producers, as it always has been. And, you know, it's funny because if you look at central bank purchases of gold globally, they're all adding. So, you know, they are preparing for some massive dislocation.
Okay, let's go to, on that dour note, Dave in Toronto. Let's lighten the mood a little bit.
Thank you for taking my call. My call is about Brookfield Asset Management. I was about to buy it at $50, but it went up to $55, and I just wanted to know your opinion. What do you think of the company as a long-term hold for a young investor? So, and the second question I had was, what do you think of, like, when you talk about, like, gold stocks and utilities and REITs, are you gearing that advice towards seniors, or would that also apply for a young investor like myself who's just trying to get dividend income? Like, would you tell a young investor to also invest in gold stocks and stuff, or would you kind of gear that towards other people?
Okay.
Thank you.
That's a good question, actually, Dave. For a young investor and for an older investor, it's time, right? So for an older investor, both are great investments. Because of time, though, can you afford to hold through the periods that we go through? Mm-hmm. So there's where asset allocation serves a purpose, right? For an older investor right now, I only have them at about 15 to 20% tops in precious metals. The rest is in solid blue chips. For younger investors, it's greater because we want to take advantage of that switch. So again, to answer the questions about asset allocation within the portfolio and how you structure it in relation to your risk spectrum, regardless whether you're young or you're old. You know, a lot of people don't want to take any risk. Mm-hmm. Brookfield Asset Management is one of those blue chip companies that, again, fits the bill for both types of investor. Right now, though, it's another decision that you have to make within the portfolio is how much weighting you're going to give it. It's one of those that we currently have it as a buy with a US $1.47 target. We think it's very well positioned for growth. However, I like it. It's been one of those that's always in the portfolio, but it has been reduced in its size, and I'd rather wait. The reason why I'm waiting is because a lot of these companies have been pulling back. When you look at the overall market, let's not forget that the high was almost 27,000 for the Dow in January, and we really haven't gotten above 25 in any strong basis. Maybe we do, right? But maybe we don't. Mm-hmm. Because of that, I'd rather wait on the sidelines and see what happens. And one thing that I've noticed, though, is that the yields are increasing, which is why I'd rather have cash when the yields get to a good way. Again, a client called me on AltaGas just this week because he noticed that the yield was getting close to 8%. Mm-hmm. We were sitting on cash, and we said, okay, let's pick up a little bit because he can't buy too many choices. But that's why I'd rather sit in cash in these periods and wait and really look at dividend yields and what's going to be the possible negative exposure to that delivery of cash flow. With Brookfield, I'm not too concerned because they're pretty well global assets and they're globally diversified, which I like.
Okay. We'll be back with Jaime Carrasco. He's portfolio manager at Canaccord Genuity. He's answering your questions about precious metals, blockchain, pipelines, utilities, and REITs. Call us toll free at 1-855-326-6266. Welcome back. We have 3 minutes for this segment, 3 gold companies to get through. Let's do it. Marshall in Toronto, take it away.
Taking my call. My question is on Marathon Gold. Do you own it? And if you don't, what would you need to see in order to add it to the portfolios? I'll hang up and listen. Thank you.
Actually, it's one that I don't own. I've looked at it. I like it. We follow it. We have it as a buy with a $14 price target. We think it's got great potential, but it's within the one of those. Right now, I'm sitting on 50% cash, looking to add, and it's one that actually looks interesting. I'm looking at our internal research to spend some of that cash with, and Alamos. I think it's a buy.
Okay, thanks for the question. Let's go over to Dale in Toronto. Go ahead.
I think you just answered my question. It was on Alamos Gold, and I was just wondering if it's gotten too rich to buy at this point. Anyways, I'd like a street consensus. I'll hang up and listen to his answer.
Sure.
Thank you. Goodbye.
On whether it's gotten too high, I think the question would be, where's gold going? Because all of these companies, once gold starts moving, they will really start moving. So I would be patient and just wait on them.
A lot of positive feeling towards this one. 14 buys, 2 holds, no sells, a return potential. So $11.33 is the 12-month price target. So that would be a return of about 50%. And finally, let's go to Jerry in Vancouver.
I mean, I've held Argonaut Gold since 2012, and I bought it at 545, so it's way below that right now. Would you continue to hold Argonaut, or should I get rid of it and go into something else? And can I have the consensus, please, Lily?
Sure. If you've held it this long, I would definitely average down or do a tax loss for 30 days and buy it back. However, we like it. We have it with a 575 target. There seem to be some judiciary issues, which right away, it's not one that I own, but right away I would take a look at what is it with that. You know, whenever anybody is in legal issues, it becomes an issue. However, it's in Mexico, so I like the Mexican system. I trust what's happening. We have it as a buy, and I would definitely take a look at this. If you have it, I would recommend you average down if you have not yet.
And check this out, 6 buys, 1 hold, 0 sells, a 12-month target price of $4.21, which would be a return potential of 91.4%. Wow.
And the legal issues with regard to the permits, and we don't think that it will not be reinstated. The building permit.
All right, thank you for that. We'll be back after this short break. Top picks are coming up.
Too late.
All right, well, it's time now for top picks. Franco, Nevada tops the list, and we were just chatting at the break about how this was also one of your past picks. So we're in a little bit of a bind here.
Well, you know what? It's such a conservative hold within this sector, which tends to be very volatile. So I recommend it to older people. It's funny because I had to change. First Majestic was also part of my last pick. That's why I knew that. That's a change in policy. But again, I wouldn't be dissuaded with First Majestic for anybody.
Detour Gold is your second one on the list. You have a $22 price target on this one with a buy.
Yeah, that's one that just had a big correction for, I think, no reason. What the company really said in the last earnings release, we had good earnings, and we've done everything to lower the cost down as much as possible, but we need the price to really come back. Before we can really start making some money, and they really have outperformed great in terms of the management, the way they've executed. So I think it's a great entry point right here for this company.
All right, and finally, Americas Silver Corporation.
Americas Silver continues to be one of my favorite silver companies. They're the world's lowest cost producer. They're down to -2. It's funny. I have to say that here's where good management, all of the management out of this company is the old Barrick team that left when Mike decided to buy the copper company. What they've done, though, is, you know, through this last couple of years, most companies have been selling all of their high grade to stay alive. What these guys have been doing is just mining the low grade because it's zinc and lead. So they're selling their garbage at a negative cost. So this company could easily turn on a dime and start mining their heavy grade that's all being stored. So it's one that I think will have quite a bit of upside when we finally get out of this fog that we've been in.
Right. Switching gears, I want to chat about Deutsche Bank a little bit with you and some of the parallels that you see with Lehman Brothers.
Well, it's funny because 10 years ago today, nobody was talking about Lehman Brothers. I think it's important to talk about Deutsche Bank because Deutsche Bank, to me, is a possible systemic risk. Deutsche Bank right now, if you look at Lehman Brothers, their Achilles heel was subprime. Deutsche Bank right now, their Achilles heel, apart from all the other debt, is the $250 billion worth of debt that the European Central Bank gave the Italian bank, which was funneled through Deutsche Bank. Now, the new Italian government saying, well, we don't really want to pay for that, so Deutsche Bank is in trouble. The other trouble that's coming down the pipeline is Merkel's political issues. Now, the problem here, though, is that behind all of those bonds, the cocoa bonds, there's almost $42 trillion worth of derivatives. That's a problem that can't be fixed if it blows. And if you look at the chart and you look at the parallels, this thing's gone below 10 euros now. It's fighting to stay above 9.
Yeah, we were just looking at the 10-year horizon there.
Correct. And one of the things
it's actually not far from where it was during the recession.
That's what's important, that this company never went up. If you compare this to the other big blue chips, it never had the rebound. So to me, I've been looking at this. In 2008, I always said, all we've done is kick the can down the road. We've just bought time, but we fixed the debt problem with more debt. That doesn't work. And I think we're here, and the real question now is, how will Trump deal with this? Will Trump say, okay, we'll bail out a German bank, or is he going to say, no, everybody to their own demises? So
and he happens to have ties to this bank, it's important to recall.
Right, but he owes money to this bank. It'll be to he's the king of bankruptcy. He knows what it means if a bank goes bankrupt. No, let's, I think what's more important, though, would be, every time we go through history in these periods, we go through a monetary reset. This would be a perfect catalyst for it. And because of that, I think it's important to understand what happened in 1933, what happened with Nixon, and the fact that this is a systemic problem.
Jaime Carrasco, always one to end on a light note. Am I right?
It's a massive opportunity.
Portfolio manager at Canaccord Genuity. Thank you for that, as always. Please consult a qualified financial advisor before making any investment decisions. Thank you for joining us. Hope to have you back with us on Monday.
Thanks for having me back.